Yeah, sure. So I think what we have always been telling here is that the most important business for Paytm continues to be its financial services business or its lending business. That is the partnership that it has with all the lenders, and they do have a great set of data, which and of course technology also, which they used to leverage and act like a good digital DSC and source these customers and give it to the lenders, and the lenders are happy paying them a certain take rate. No, the problem here is what's happened here is because of the restrictions which are imposed, which have been imposed in the Paytm Payments Bank. There is clearly a worry that there could be exodus of a lot of customers as well as the merchant ecosystem. If that indeed happens, clearly the lenders will have to reevaluate their decision or relationship with the with 197, which is the parent company of Paytm Payments Bank. Now, our channel checks reveal that indeed is the case. The lenders are reevaluating their position with 197. Could be for a variety of reasons. One of the lenders, largest lenders, has already reduced their exposure to Paytm by from 2,000 crores at the peak down to 600 crores now, right? So you have seen significant scale down by the lending partners, and there is a possibility that there are more in the pipeline, and at least some of them have obviously kept lending in a limbo for the time being. So all that is actually will have a corresponding, catalyst effect on the entire company and its business model of a profitability model. So the call that we have taken very clearly is the fact that there will be a significant reduction in the distribution business revenue, and that, remember, is the highest EBITDA contributor in our view. And in the issue of the fact that these numbers can come down quite significantly, we of course have changed our view and accordingly cut our target price to $275.
Right, Suresh, this is Vishwanath here. The question that I think a lot of people seem to be wondering is the future of the parent app with regard to where the payments bank is. But your report mentions the lending part, which of course you detailed just now. I want to get a sense as to, when the restrictions came in, the company came out and said 300 to 500 odd crore worth of hit on EBITDA. But it seems that the hit or the pain is going to be far more, far deeper and far widespread than previously anticipated when they spoke to the analysts.
Our view, obviously the company's view could be different, but note that at the end of the day, the impact is based on certain things which you can't do. But what about the impact which is coming from the fact that in future you will lose customers and you lose certain proportion of your lending business? That obviously no company can quantify and be more futuristic. And that's the call of analysts like us, right? So we are taking a call that there can be a reasonable exodus of customers as well as merchants, and that could have a significant implication with respect to their lending abilities, and consequently that this segment of the revenues will also get affected and consequently profitability. So the 300 to 500 crore impact doesn't take into account a lot of futuristic developments which could very well play out not necessarily as per the management's expectations, right?
The one part that came out, we reported here as well as some other news reports out there talking about compliance-specific issues. What seems to be playing out is also a reputational problem, apart from, of course, the financials and the impact of these norms on the customer base. The reputational hit, of course, also impacts future business relationships. Just take us through what could maybe hit Paytm through because of this reputational problem.
It's already seen in the case of the fact that the lenders are relooking at the portfolio or the relationship that they have got, right? And also the fact that because of whatever issues that has happened and Paytm Payments Bank operations have been severely restricted by the Reserve Bank of India, what's happening here is any new onboarding of customers will also require a very detailed KYC check to be done. So it is not that tomorrow Paytm can get up and sell their Crore merchants to the banking players, right? Any bank who is going to take, for example, the nodal accounts from Paytm Payments Bank, they will have to do their own significant due diligence and KYC of each and every customer or merchant that they are onboarding. That makes the entire process cumbersome. And that's a function of some of these regulatory actions and, as you said, the reputational issues which have been brought to the fore.
29th February deadline then seems very tight considering the task at hand, right?
Yeah, of course. Yes, it's a difficult. I mean, that's what we don't know. The media was speculating. You guys were speculating that he went and met Reserve Bank of India and Nirmala Sitharaman, Finance Minister. So obviously, I guess that close shows the gravity of the situation as to why, I mean, those kind of meetings, as per the press reports, were required because maybe there's some relaxation that they sought out for. But clearly today also, Reserve Bank of India governor has gone ahead and said that there is not going to be any rethink on the decision and it's final, right? So.
Right. Suresh, so all of this that you mentioned, you obviously don't believe is already in the price, right? And hence you've downgraded the stock
That's right.
to levels of 250 odd.
Yeah.
When you looked at the valuations of this, up until the early Jan, you could get multiple businesses for 197 communication in terms of pricing and valuation. From where it stands right now, and when you value the company or value 197, is that 250 rupee price per share only valuing or taking into consideration the UPI app that may be untouched or may survive for now at least?
No, first, my target price is 275, not 250. Just a technical correction
Thank
there.
you.
But yeah, no, but look, I think we were always of the view that whether it is UPI or whether it is wallets or whether it is various other commerce services and soundbox services that they provide for that merchants, everything at the end of the day boils down to, more like an EBITDA neutral kind of a position because obviously they also have to make a lot of tech investments. And that helps them to retain the customers in the overall ecosystem. And on top of that, they build their lending business, right? So the call here is that you actually monetize your lending business in a big way, and obviously the other businesses are just barely breaking even. The highest margin is on the lending business. Now, the fact that customers may come to the app for using UPI, which is still allowed, that's not nothing stops them from using like just like a Google Pay or a Phone Pay, except that at the sponsor bank level, there may not be Paytm Payments Bank and maybe some other bank which is there, which is the case with Google Pay and Phone Pay. But then my point here is then how you are different, right? At the end of the day, your competitors are also doing something similar. You're just aping them in a way. And you of course had a great advantage of being a two-way ecosystem player between the merchants and the consumers. The fact that you can no longer maybe sustain that to the same level as you had before this payments bank restriction makes life even more difficult with respect to getting the right kind of customers to monetize or leverage and sell it to your lending partners. That's where the challenge lies in.
Suresh, now let's do this, right? Let's do a little more forward-looking discussion here. A few quarters out, assume the dust settles, the stock continues to correct, goes on all the way to 270, 300. Now at that stage, does it then become a buy? A, and B, in the interim when it goes down all the way from 400 to 270 or even sub 270, what would it take for you to reconsider your rating on this one? Could there be any option or opportunity of a re-rating for Paytm? You've also talked about a bull case and a bear case, and in the bull case, the implied valuation from what I see is 540 rupees. So there is still that chance, is there?
No, of course. Look, I think let's look at it in this way, right? Numbers, what the investors should look at. They generated about 600 crores of quarterly revenue for the distribution side of the business, which is the distribution of financial services, predominantly loans. Now, if you were to annualize it, that comes out to be 2,400 crores. Our numbers take into account a 50% reduction or 50 to 60% reduction from that level. Now, the call here is how much can you sustain that? And if you see 2, 3 quarters down the line, them touching a bottom and then again starting to grow that number 20, 30% or 40%, then there is obviously a turnaround, which means the lending, they're able to monetize the data, they're able to retain some customers in the ecosystem, the lending partners are happy lending that. So the critical number you have to look at is this quarterly run rate of 600 crores, which they reported for third quarter in terms of distribution business revenue, how much sustainable that is, that is going to come down now in the interim and then post 2, 3 quarters, can that recover back is ultimately going to determine the eventual outlook on Paytm and obviously the eventual target price post that.